Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today, we take a look at two cross-listed stocks on our local exchange, Sagicor Financial Corporation and Grace Kennedy Corporation, for the 9-month period ended 30th September 2016. Both stocks have advanced considerably on a year-to-date basis, with Sagicor up around 21% year-to-date, while Grace Kennedy has advanced a significant 103% in terms of share price year-to-date as well. So let's take a look first at Sagicor. And here we can see for the 9-month period ended September 2016, Sagicor delivered earnings per share of $1.07 TT, up 165% from the 41 cents generated a year prior. Net premium revenues were relatively stable at about 1% growth from 3.28 to 3.3 billion TT dollar equivalent, while net investment and other income advanced nicely 12% from 2.1 to 2.4 billion TT dollar equivalent. The absence of significant discontinued operations contributed to an overall increase in profit after tax from $282 million TT equivalent to just over $600 million, or that 114% increase that we can see. And dividends per share also was boosted by the recent announcement by the company of an interim dividend of 2.5 cents, an increase from the 2 cents US, which has traditionally been paid for quite some time historically. So looking ahead, what we can see is that Sagicor seems poised to deliver better returns to its shareholders, and this is on the back of several positive drivers for the firm, and these would include the absence of discontinued operations from its European foray, as well as more stable net premium revenue. We can also see as a positive trend the increase in net investment income over the 9-month period, where it would have started at around 1.8 billion in 2012 and moving now to just over 2.4 billion as mentioned in 2016. So a nice improvement there. Going forward again, another positive driver for Sagicor is its geographical exposure, where just around 43% of its operations or revenues come from the Jamaican jurisdiction, while the rest of its revenues are nicely spread between Trinidad and Tobago or the Caribbean, USA and Barbados, accounting for about 14 to 15% each. Sagicor is currently priced at around $7.50 and trading at a price-to-earnings multiple of just around 5.4 times, well below the sector average, excluding NEL, of around 10.1 times, offering reasonably good value to investors. It also offers a trailing dividend yield in excess of 4%, and as we can see, trailing dividends per share has recently increased from 4 cents US to about 4.5 cents US, and could increase further should the company continue to post very positive results. Sagicor also provides investors with an implicit hedge against TT dollar depreciation by reporting and declaring its earnings in US dollars, but importantly, it pays its dividends in TT dollars. So on the basis of improving performance, attractive dividend yield, and a relatively low valuation, Bourse maintains its buy rating on Sagicor. So let's turn to Grace. And for the 9-month period ended September 30th, 2016, Grace Kennedy delivered earnings per share of around 18 cents, a stark improvement or 61.7% increase from the 11 cents declared or reported in the prior period. This was driven by a considerable growth in its revenues, which were up around 11.6% from 3.1 billion TT equivalent to 3.5 billion TT equivalent. Other income increased some $44 million TT, or 75%, which contributed to the overall increase in net profits from 126 million TT equivalent to 195 million TT equivalent, or a 54.6% increase. Excluding this one-off gain of 22 million as mentioned, EPS would still be, or earnings per share would still be around 15 cents, or 36% higher than the prior period. So good performance there by Grace thus far. Taking a closer look at the numbers, we can see that Grace Kennedy's revenue by segment, the main driver for improved performance has really been the food and trading sector, as we can see in this fuchsia pink, which has increased 11% year on year from 2015 to 2016. It should be noted, however, that the other sectors, banking and investments, insurance, and money services, have also increased between 8 and 20% year on year. So overall, the firm is growing quite nicely in all of its segments. in terms of geographical exposure, that's another positive driver for Greece. And we can see that while the firm is still reasonably reliant on the Jamaican jurisdiction for about 51% of its revenues, there has been a declining trend in that importance from around 67% in 2011 to just around 51% as at the end of 2015, and it's expected that that reliance will continue to decrease, particularly with the initiatives and efforts being taken to boost their hard currency earning business jurisdictions such as North America and Europe. And here we can see that North America, as a percentage of revenues in the green, has increased in importance from around 12% in 2011 to 25% in 2015, and it's expected, based on reports by the company in its most recent release, that revenues have continued to increase in that area. So comparing apples to apples, which is Greece Kennedy had a stock split, a 3-for-1 stock split in August 11, 2016. We tried to compare what its share price would be pre-stock split to what it would have been prior to the stock split also. And here we can see that in September 2015, the stock price was just around $3.61. And today, in the equivalent price, it's around $8.22. That rapid rise in share price has come at a faster rate than growth in earnings and dividends. And that's why we saw a drop in dividend yield, trailing dividend yield, from about 3.6% to just under 2%, 1.96% to be exact. Notwithstanding this, the company seems relatively well poised to take advantage of growth opportunities, which it seems to be enjoying in the hard currency market or international jurisdictions. Based on its improving revenues and positive diversification initiatives, but tempered by its low dividend yield and increasing valuation, Bourse maintains its neutral rating on Greece. That's it for this week's edition. For more information, give us a call at 628-9100, email us at invest@boursefinancial.com, or to learn more about how Bourse can add to your value, visit our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.